Hey there, Joanna. Coach Joanna here for you. Chiming in with our Thursday coaching, answering questions from all you wonderful fans. Uh, Today's question on Coach Me Joanna, and I'm out here and by my nice view. There's a better view on the other side, but this is where I'm doing the studio. We've got new carpet and everything. But today I wanted to talk to you about how to become a private money lender. This is what I was recently asked, and I'm training my students on it right now. I did an in-depth training on Monday so that they can, choose to do what they want with it. So what I did was I said how to be a private money lender, what is a private money lender, and how do you find private money lenders, right? So those particular aspects of it is what we went over on our Monday call. So I thought I'd share this with you guys because it's super important to know if you're doing real estate investing. First of all, what is the difference between it all, right? Like, how come you don't use traditional money, Joanna? And then how come, what's the difference between a hard money lender and a private money lender? So I'm going to chime in here on those particular facts and say that, first of all, the difference between a private money lender and a hard money lender is a hard money lender is an institutional type of company that is a group of private money lenders. So they're doing this for business, right? The typical private money lender is just somebody like you and I who has a retirement account or money in the mattress sitting there, money in the bank, money sitting anywhere, and in the stock market, and they want a better return on investment. So real estate is one of the number one assets out there. It totally outperforms the stock market, and it's quicker and it's safer. So it's secured by a deed of trust and is insured. That's the other thing, is insurance on the house. So if you're looking to be a private money lender, you don't have to have hundreds of thousands of dollars. You can have 10, 60, 150, a million, like it doesn't matter. So there's all kinds of deals out there. If you're in California, like a lot of my students are, it's a higher end market, right? That's where I'm from. I'm born and raised there. So I know the market very well in California. But I invest in multiple states and have students in multiple states. Texas, Virginia, Atlanta, New Jersey, Pennsylvania, Colorado, of course, California, all over the place. So it doesn't really matter where you're at. You can be a money lender anywhere, but the purpose of me bringing that up is that sometimes you only need this much, because let's just say in Pennsylvania, I'm closing on one right now, and it is purchase plus rehab is $65,000, right? So purchase plus rehab is $65,000, and it's in a pretty well-to-do area for this particular Northeast Pennsylvania area, and it's not California, so you would need purchase plus rehab in California might be $1 million, right? So there's a huge difference. Same thing in Colorado and New York, the very volatile states. But there's still plenty of, Midwest places to make money, especially if you're buying and holding, which I was just on my high horse about on the last call, that you have to put your money in real estate. You have to. Everything leads to that, right? Because the dollar's falling so much. And I'm not going to get into too much of the value of the dollar, but it's also important to this conversation because being a private money lender, you're going to get more from an asset than you are an actual tangible dollar. I know. So it's a good thing to do to put your money into real estate. So there's a private money lender, there's a hard money lender, and there's institutional money. How to be a private money lender, how to find a private money lender, how it all works, right? So you can find them everywhere. There's, Sally down the street that may have a 401k plan, an IRA plan, Roth IRA. It needs to be self-directed. And it's a quick switch. It only takes a minute to switch from traditional to Roth. And so some people may make too much money to get a Roth and self-directed Roth IRA. And so they have to get traditional first. But once you have traditional, you can take it and you can flip it to Roth. So just saying, there's ways around it. Just give me a buzz, send me a DM, and I got ways to work it out for you. I've been doing this for years, and I've helped many people become private money lenders. So there's that. And then how do you find private money lenders? Again, they're everywhere. They are everywhere. It could be Sally down the street, like I said, with a 401k plan, or a Roth IRA, money in the mattress, money in the bank. So now let's think about this for a second. This will prove my fact of the dollar sinking. And you could Google it anywhere. I know this stuff. But I'm going to tell you, because you're listening here today, that the dollar, what used to be backed by gold back in the 70s, is no longer. It's all we're going to have a money matrix podcast on how money works and all of that. But, the value of the dollar used to be strong back in the day. And now, inflation. So if your money's in the bank, here's an example. If your money's in the bank, how much interest are you getting on it? Or anywhere, if it's in a CD or a 401k or somewhere in the stock market, like what are you getting, right? So if you're not getting at least 5%, you're losing money. You have to get 5% on your money or greater in order for money to be working for you. So, and here's another tidbit. So investors like me who've been, in this game for 20 years, we don't use our own money because typically, if you put your own money into a house, it's like dead and you're banking on appreciation. But if I took my money and I put it into somebody else's project, then I could charge interest. So my money's making money, right? Make sense? So this is what investors do. They invest in each other's properties so that their money's always working. It's always circulating. So food for thought to think about. So if you want to become a private money lender and you have, $2,000 or more, like that could be used for earnest money deposit or some sort of transactional funding. There's all kinds of reasons for a $2,000 investment. But it's not going to be in a bucket of 1,000 investors like a REIT. That's a real estate investment trust. You don't want to be a part of those because you don't understand. You need to be able to lead your money and know where it's going and have it secured to real estate. I'm just saying that it's just the better way. The REIT is the scapegoat way. How's that? So anyways, you want to be able to know what's going on with your money. So attaching it to real estate and having it secured and insured is important. And then being able to understand the differences between private and hard money lenders. Hard money is more institutionalized, and it's can go up to upwards of 13% plus 4 points. Points are 1% of the loan amount. It could be $4,000 that you have to pay just to have their services. Anyway, so and then the institutional ones are Wells Fargo and B of A kind of banks, the big banks. They have minimal products and a lot of criteria. So private money is just a handshake and secured by a note. I'm not asking anyone to trust me. trust me, I'm Joanna. I've been doing this for you. I never say that. I say trust the asset because it's asset-based lending. It's not about my credibility. Even though I have plenty of it, I don't boast it or put it out there that you should work with me because. No, I don't. You should work with me because I'm giving you an opportunity to tie your money to real estate, which is giving you more money than anything else that you have going on right now. That's the end of the story. Has nothing to do with me, other than me connecting the dots for you. So anyways, I'm kind of rambling a little bit because being a private money lender is super important to me, and a lot of my students are A, wondering how to be one, and then B, how do you find them, and then C, how do you make it all work, right? So hopefully this has been helpful for you. Give me your comments down below and let me know, type value if you got value out of it. I'm also going through my 5-day challenge next week. Starts Monday the 15th. Going over how to get started in real estate investing. So you can DM me for the details and I'll be happy to get them to you. We start Monday. There's a whole workbook attached to it to make sure you get the best value. And it goes to deep dives into markets and, you know, how to choose your market, how to run the numbers, no repairs, how to fund it. You know, that's kind of what we're talking about today. So anyways, type value in the comments if you got some value, and then DM me any questions you may have. If you want the deets for the challenge, I'm happy to get you connected. All right, I hope you're having a beautiful day. This is Joanna on Coach Me Joanna at Bottom Line Wealth, and hopefully I see a lot of you guys on Monday, so it's going to be super fun. It's all live. It's in my Facebook group, Retire Early Through Real Estate Investing. And it's just a Facebook Live in there. So it's super easy to connect and ask questions and get yourself rocking and rolling to get started in real estate. If you haven't already, even if you have and you've been trying and you didn't get a deal, I've had participants negotiating on a deal by day 5. So I give you actionable steps to take to get there. And those participating get, you know, the extra attention to answer the questions, because I mean, you're moving it forward, you might as well get the coaching, right? All right, so again, type value in the comments if you got some value, and I will see you guys on Monday or next Thursday.